Hey Rebels, welcome back to the channel. I want to share with you a post that I found this week. It's from one of the most respected technical traders in history, someone who created one of the most widely used indicators across the globe. He rarely shares his views publicly, but when he does, it's worth paying attention to. The last time he posted something like this, the market rallied for 3 straight months without a significant pullback. And here's the thing, the open interest and sentiment data right now, they're showing the exact same readings that they did at those bottoms. So let me show you what's lining up, who this trader is, and why this might be one of those rare occasions where everything just lines up perfectly. This is definitely a video that you don't want to miss. If that sounds good, like and subscribe, and let's just dive right in. Who is this famous trader? The trader I'm talking about is John Bollinger. He's the creator of the Bollinger Bands, which is one of the most widely used technical indicators on the planet, recognizable by pretty much everybody. So the last time he posted here significantly was on April 10th. And I want to show you on the charts when he posted. This is when he made a post. He doesn't really, especially about crypto, he very rarely talks about crypto, but he made a post showing things that he was seeing in the charts, and the market basically just rallied directly after that. And so he recently also made another post about Ethereum and Solana and Bitcoin, and also just now posted about the same thing, basically the Bitcoin chart, saying that he's liking what he's seeing. So basically, he's seeing more posts at these lows. And we're also seeing other sentiment data and open interest data lining up that kind of are converging basically to show a similar setup. Okay. I have another way to look at this here. The Bollinger Bands, basically here I have an indicator where it shows the Bollinger width, where the Bollinger Bands are very, very tight. It's only happened a few times where it's been lower than 22, and I'll just get myself out of the way. That happened in 2016, 2023, and 2024, and I want to show you what happened, and again, just now, and then I want to show you what happened to the market shortly thereafter. Basically went on a nice rally each one of these times, accruing over 100%. So we basically had over 100% move after each one of these signals. So when the Bollinger Bands compress this tightly, it is something of significance that is definitely worth paying attention to. The other thing that is happening around these times, the open interest is at very, very low levels. Now, I've talked about the funding rates being low or even negative. Those are also different times to be interested in the market. They give similar readings basically. But if we see what happens in a bull market, there is a caveat to this because these signals do show up in a bear market. And we are still under the thesis that this is a bull market because we haven't had any of those large macro indicators suggesting further downside. And we can see that these low levels of open interest typically mark the low ends, the lows basically. And then we rally from that point. We're seeing those signals as well. And then also you can see here, if I get myself out of the way once more, you can see the forward returns, 10 days, 30 days, 90 days after these signals, are pretty significant. So a lot of these significant things happening at the same time, as well as getting some words from a trader that we basically don't ever really hear from. And he very rarely posts on crypto. So that's something of significant. The other thing I have marked up here on the charts to show you is the sentiment readings. We're getting unprecedented bearishness. We had this was the highest bearishness that we had seen in this price history that I have shown here. Major bearishness right here. And in fact, it was 22 times more bearish than COVID because COVID, believe it or not, actually had a neutral reading. And then we got high levels of bearish sentiment right about here, which was essentially just a reaccumulation before that next push higher. And what I wanted to mark up in the charts and note is that the bearishness right now, although we're a little less bearish than these lows, the bearishness right now is still significantly high, about the same levels that we saw before this last push before we had the COVID crash. Now, everybody is anticipating the markets to roll over. Everybody's afraid of a crash, and this big crash is coming. Yes, it is coming. I have no doubt that soon we will have some kind of bear market, probably even a secular bear market where we, go to the downside for several years. But we have the same bearishness that we had even at these levels, which at the time, the market was at highs, and there was still a lot of bearishness around here, kind of like we are seeing right here. And this chart may look scary and say, okay, there's not much time, but actually this measurement right here is about 30 weeks, which even if we get a similar reading, that pushes us out into May of next year. So things are still looking pretty positive there. A very weird side note that somebody else actually brought up to me is that right now, typically stockholders lean Democrat and bondholders lean Republican. This is just kind of a BS tidbit of information. And so it is possibly that the party allegiance right now is blinding these participants of the stock market that the economy is actually doing fine. There's no real indications right now that the economy is in shambles. We're getting pretty easy readings across the boards, which is what's allowing the Fed to actually cut rates. And so we're seeing easing across the board. We talked about that, I will talk about that in more depth in a future video. But yeah, so basically all green lights here. Things are actually not looking as dire, even though the sentiment is terrible. We're basically just getting similar readings that we see at lows time and time again. The one thing that's kind of the hiccup is that 4-year cycle where we are seeing similar time frames converge to where, people are expecting the end of the cycle, and then this time, shouldn't be any different, and we should roll over in a bigger way. So I do have a video coming up next week showing why the 4-year cycle is potentially dead and why we could see more upside, even though we are coming into the final peak of this real estate market. Like, I don't want to be a perma bull here, because I think that that's foolish. But it's also, we want to ride the trend as long as we can. So we just got to find what the data is saying and what it's actually telling us. So I am going to dive into the weekly analysis. This is something I do every single week, where we just look at the weekly candles and see where we are on the different things that we track. And then at the very end, I am going to go through the various trades that I have, because I have a very few. I have my long-term portfolio. I haven't really touched that, but I have actually just put on a few trades recently that are just starting to get in profit, because it does seem like the market is starting to heat up. So yeah, you want to stick around for that. But until then, why don't we quickly jaunt through the weekly analysis on Bitcoin. I kind of had my line in the sand right here above 108. I wanted to see closes above this level. I wanted to see us start closing above these tops and above these bottoms. So we actually had a decent close this week. Something that's interesting is both of these weeks after this, basically after this crash, have been inside weeks. Actually, this one, I think a different chart actually had 2 inside weeks. But either way, last week was actually an inside week, kind of a non-event. Doesn't really give you any swing data. If you're a swing trader, it doesn't give you any indication that the swing has changed. We could very soon see our swing indicator turn up, but right now we still are seeing lower lows and higher highs. So the market is literally uncertain right now. So if you're feeling uncertain about the markets, that makes sense, because we're just basically trading in a range right now. We're not trending very clearly. But I talk a lot about the strength and weakness on the channel. The other thing I want to make note of is if you're new to the channel, we've been following the markets, well, for months at this point. But we had this 3-week red signal here, and we were waiting for this signal. Shows up many times in the markets, and I've reviewed that on weekly analysis, expecting lower prices. That has happened. That actually did come to fruition. We did see those lower prices. So this whole time we've basically been bracing for that, and that has come to pass so far. And then we will just kind of have to see what the data continues to show. But right now we're showing strength. And then if I zoom this 50% tool up again, we had a nice strong close above this 50% level. And all this is the Fibonacci retracement tool, settings 0.5 and 1. Majorly useful tool. Markets are drawn to them almost like magnets, and it gives you a clear indication of how we are trending. So last week we were definitely in weaker territory than we are this week. We had a nice weekly close above this level. We want to see multiple closes above this level in consolidation to confirm that we are continuing strength. Now that could happen very quickly. We could go up very rapidly from here, but either way, accumulation in this zone is a very positive thing. And we also haven't been too panicked on the channel, because we've noticed that Bitcoin in general, especially as you move out, is just I won't say accumulating, because we don't know if it's accumulating or accumulation or distribution, but it is basically consolidating or trading sideways in strong territory. Now, I have had some requests to do some other tokens, so I will also get into some other tokens as well. And then also, if you've made it this far, please like and subscribe, leave some comments down below. It's going to help me out quite a bit. And then leave me comments on anything that you would like me to review, anything specific that you'd like me to go over. If you like this type of analysis, please let me know. And I'd be happy to make some videos based on that content. So the other thing that we track, Bitcoin dominance, falling out of that trend, falling out of that channel. Talked about that. It's consolidating in weaker territory on both counts from this move and this move. Basically just a very weak rally at this point. Bitcoin has had ample opportunity in this downtime during this correction to steal dominance, and it just hasn't. So this has been a very subtle sign of strength from the other altcoins or the other markets, that actually Bitcoin hasn't stolen a lot of dominance, even though things have been very scary and uncertain. Usually these scary and uncertain times, altcoins just absolutely bleed to Bitcoin, and Bitcoin dominance goes on a tear. So that's subtle signs of strength there. The USDT dominance is definitely one that has had me the most spooked. This is basically giving us an indication of whether dollars are going into crypto or coming out of crypto. We want this chart to go down. That will be in our favor. We've been seeing some signs of weakness. We wouldn't have wanted these levels to close above this 50% level. We've all closed weak, and we actually had a close beneath this all-time support. This trend line's been an all-time support pretty much since its genesis, and we like to see consolidation below these levels. Basically, these are the times that we have a more buoyant market for the altcoins, essentially, which is what most of us are investing in. So first sign of strength there is we have a close here beneath this level. And then if I also turn on the volume quickly, what I want to make note of is that we had some extreme volume on this abnormal bar, and a lot of times that can suggest an exhaustive move. So this candle right here where we came up very rapidly and then closed very weak. That was kind of an exhausted move, kind of an abnormal move that can oftentimes also mark pivot points. So I just wanted to make quick note of that if we're looking at the volume. So yeah, we talked about this many, many times on the channel. If we get back into this zone here, I think we're going to be looking a lot better for the altcoins in general. And if we break below this line right here, I think that's when we get the absolute crazy altcoin mania. We may never reach those levels, but those are definitely levels that we're tracking on the channel. We do not want to see strength in this chart. We cannot see strength in this chart. So far, we're seeing some weakness, which is what we want to see. And so what I'd love to see is some closes beneath these tops and basically get down back into this range that we were in back in August of this year. Those are the areas that I want to see this chart get to and potentially continue trending down, but one step at a time. So quickly as well, I am trying to just kind of rapid fire through this because there's a lot of other charts that I want to get into. I know this one's kind of a loaded one. This is total 2 against Bitcoin. Finally have broken trend, coming down for a retest. The thing that I do like to see so far is that we have not bled to Bitcoin very hard. Usually when there's uncertainty in the market, it just rapidly bleeds to Bitcoin, and Bitcoin just takes all that dominance right back. We're not seeing that. And in fact, we are seeing on the others, which is outside of the top 10, much weaker currencies in general, we actually are seeing some positivity there where it's holding up relatively strongly compared to what you might expect in such an uncertain environment. In fact, we're seeing weekly closes above this level. Nice V-shaped recovery so far, which is also quite typical of markets that get kind of overextended to one side. And then this, of course, is another way to visualize this that I've talked about on the channel, where we have the total 3 minus the stablecoins versus Bitcoin, where we have that October period, generally a slowdown and then a rapid expansion. We've gone through multiple examples of this seasonal weakness. There's many charts that show this, and I've showed that on the channel many times, but I basically just condensed it to this chart for now. This is a seasonal period of weakness, and then we get an expansion to the upside, and we're basically lined up kind of nicely waiting for this expansion to the upside. Now, something to note is that we do have the total, if you notice, the total 2 has broken trend. We have not broken trend when you exclude the stablecoins. So I find it very useful to exclude the stablecoins in a lot of the charts because it can give you a more organic reading. And I can show you that by, if I can get the chart here really quick. This is the total 3 minus stablecoins, and the total 3 itself is a lot closer to the all-time highs, giving you kind of the illusion that market is actually a little bit stronger than it is. Now, we're definitely not in anything dire right now. This basically just looks like a giant cup and handle ready to break onto the upside. So this is all kind of early moves for the altcoin space, basically the last thing to get liquidity on the risk curve. And so I have another video, again, coming out this week that talks all about what really matters in these markets and what these markets are following. And that basically, spoiler alert, is global liquidity, and that is on the rise and projected to continue to rise. So, okay, I think that's about it for my weekly analysis. I mean, honestly, things are looking pretty good. Things are behaving as we would want them to in a recovery phase. And we are also getting sentiment and open interest signals that are also promising, basically when everybody's the most fearful and doubtful, better times to be interested in the market, and basically not just abandon the market and walk away. Those are the times that you really want to knuckle down and study, even though it's hard, even though it's boring. Those are the times that you want to continue to be engaged. Okay, so now I'm going to go over a few of the majors and what I'm seeing as far as strength and weakness, and then I'm going to show you a quick little tip on how to basically compile all these together for yourself. If you have a giant list of altcoins, you want to see which one's performing best. I have a very quick trick to basically assess the strength and weakness of any which one. It's very tempting when you see a chart to find the chart that's the lowest, because there's more upside, but really the reality with that is that there's a lot more support and resistance to fight through. It has a lot of work to go to the upside, so you want to go with the fastest horse, right? So the fight doesn't always go to the strongest, and the race doesn't always go to the fastest, but that's how you want to bet. So you want to find strength in these markets, which is hard to do, especially when you have a high risk appetite. It's just really tempting to go for basically the something that appears to have the most upside. Okay. Anyway, let's just dive into the analysis on some of these other popular coins. So I have XRP in front of me. I wanted to talk about that first. I know there's a lot of people that absolutely love XRP. There is a slight cautionary tale with XRP, and I have this on a monthly chart. And from the lows to the highs, I've marked up the time frames that XRP has done in the past. And it's very rhythmic. 12 to 13 months to the upside in this market is about as long as the bulls can maintain control before there's a significant correction. And these significant corrections also have similar time frames. But I want to make note is that we have 12 months to the peak here, and we're kind of running out of time for XRP. If you're an XRP holder and you're hoping for wildly higher prices, we're basically getting at the end of that time frame, which is a very significant time frame to have a lot of confidence in much further upside. So that's just something I wanted to make mention, because I know a lot of XRP holders myself, and I've warned them about this. Not telling you to sell your positions or anything like that. None of this is financial advice, but it is a good thing to go into your market and see what it does typically, right? So we've hit that 12-month mark. However, I guess the good news here is that at least on a monthly time frame, we are looking to close above these tops, and we are in the top end of the 50% tool. And it seems to be, I guess, following the similar rhythm of the market. So I'm not saying that XRP can't go any higher. I'm just saying pay attention to those time frames and watch out for the weakness below these levels. We just don't want to see any price action with XRP sustained at these levels, because basically I think it's going to mean time's up for XRP. On to Ethereum. Ethereum looking to be basically recovering its strength. I have the 50% tool. I just like using it for strength and weakness. It makes things quick, and you can eyeball it and compare across the board. That's very good. I want to see Ethereum basically consolidate above these tops. That's what we want to see. We just got one weekly close above that level. Let's wait and see multiple weekly closes above that level to assess the strength and feel a little bit better. Again, this whole entire move consolidating in strength. So even if we have short-term distribution right here, probably not a big deal for Ethereum. And then, of course, what we really want to see is Ethereum breach these highs. That is going to basically give the rest of the altcoins permission to go, basically, because it took Bitcoin going into all-time highs to give Ethereum permission to run at all. And it's just now that we're getting up to these highs, and basically Ethereum breaching these highs is going to give permission to the rest of the market to follow suit and continue that capital rotation. Okay, so Ethereum, we want to just see continued strength. We saw some short-term signs of strength closing above these swing lows and closing above that all important tops. So that's a good sign there. Solana showing strength. Solana actually has been the best performing, out of the ones that I track. Basically, it's the only one out of all of the majors that has continued to hold its gains above Bitcoin. So starting from the beginning of the cycle to now, Solana is the only thing that has outperformed for the whole bull market. So you had XRP not outperforming, it had a wild outperformance, and then now basically it's back down to below the returns of Bitcoin. So that's the whole thing we want to assess. If Bitcoin is the top performing asset in the world right now, if we're not beating Bitcoin, then what's the point, And so that doesn't mean that we can't trade these markets and have a little bit of fun there, but it's just something to keep in mind. So again, 50% levels, hanging out in strong territory on this entire move for the whole bull market. We definitely want to be in these zones. There's several altcoins out there that are not in the upper half of of their bull market range, and that's something that you want to avoid typically because there's a reason that they're not that strong. And so then assessing it from this move right here, we can see that we're just now breaking into stronger territory. You know, we had that nice Solana was performing very well, just marching along nicely, showing some strength. And then of course that crash kind of threw a wrench in things. But as of right now, we're starting to see some more strength come back into Solana. So we're just going to have to keep tracking that as the weeks go on. And then actually Sui's, this is one of my favorite tokens, is a lot of people's favorite tokens, had some promising action here where we broke out of this weekly downtrend, consolidating here in the upper half of that tool again for this giant range here. And then that crash, basically Sui had one of the worst times. The saving grace for Sui is that with this move right here, that major move to the downside, we did very quickly start closing in the top half of that tool. So we have 3 weekly closes in the top half of this move right here, from the low here to the high. We have 3 weekly closes above that level. So this is the market. If it were not the case and we were having closes below this, it would just tell us that it was a little bit weaker. So yes, we're below that trend. What would we like to see? It is not going to take much to see Sui get back into a even stronger territory, and that would basically be a break above this trend and holds above this level here. That's going to be very, very promising for Sui. So I don't think I think that we definitely have some positive things coming for Sui. If the market becomes more buoyant, we get more liquidity. I think Sui is absolutely, it's a top blue chip. It's going to see some good action. But right now, technically weaker than Solana, which you could also see in a Sui versus Solana chart if you wanted to view it in those terms. Okay, I think that kind of got through the majors. Hopefully that gives you an idea of just kind of blasting through, getting a gauge of the strength and the weakness. You want to be in the strong tokens. You want to be something that's beating Bitcoin. So what I have here is what I call a spaghetti chart. And all you really do to add a token, I have here Bitcoin and I just click on Bitcoin, I'm in Bitcoin, and then I click on the line, that turns that into a yellow line. And then I come up here to this plus sign. I can add anything that I want. I've talked about this many times on the channel. I'm just going to add one that I'm thinking of right now, just to show you how easy that is. Why don't we think of another one? Why don't we do another popular token, Beam? So that's how easy it is. You just add a couple tokens there, that adds it to the list, and then you can see very quickly which ones do you want to be in. Well, I mean, out of the bat, you want to be in virtuals, you want to be in Tau, you want to be in Hype. Without even looking, immediately you know 100% that from those lows, because I marked this up on that liquidation day, those are the ones you want to be in. Anything that is below Bitcoin right now, keep an eye on. Does not mean that it can't go higher, but you definitely want to be in the ones that are outperforming right out the gate. And Tau right out the gate, because I was tracking this earlier, was the first one out of the gate, performing very, very highly above the rest. Now, Tau is an AI project that is another blue chip that hasn't really, it's basically been trading sideways for forever. And that one was very, very strong out of the gate. And then we have virtuals here also performing very strong. So this is a very, very useful tool. You basically don't want to be in anything that is, not outperforming Bitcoin in general. Now you can keep moving this. What I do to make this easy is I will find different lows in the market. Whichever low you want to measure from, let's just do this again. I'll put a vertical line and then I'll just drag this over. And that's my starting point. How is the market doing from that point? You might want to read the market from a little bit sooner, and that actually gives you a little bit better reading. Now, most of these tokens are outperforming Bitcoin, which is what you want to see. Virtuals being the absolute standout, which is very good for me anyway, because I actually snagged a entry in virtuals, which I linked down in my Telegram group. That's the other thing too. If you want to get a lead on some of the trades that I'm doing, any of the market alpha, join my Telegram, join my X account. That's where I post things first. And I posted this trade a couple days ago when I entered on a swing break right here. Basically, you had this descending wedge coming down that I've been tracking for a long time, got stopped out and liquidated, of course, in that liquidation event right here. And basically price action was starting to come up. And then what I did is I basically just entered on a daily uptrend, because once we breached this level right here, we technically had higher highs and higher lows. So now I was with the trend. So I posted that on the account there, and we were starting to see significantly higher volumes there. The other thing that I track on the channel is volatility, and I entered on relatively low volatility. That's what you want to do. If you zoom out here, you don't want to be involved in high volatility times, because it's definitely more volatile at the top. So that's something that you that you want to keep track of. So yeah, had a good entry there. I am have my stops to break even, and I've basically pulled out my double my initial investment. So now I can just let this thing ride, and we're in significant profit now. And then I can use those. I can use that initial investment to go and find other favorable trades. So I would just want to go through my trades right now. What am I in right now? Very few and pretty small positions, except for virtuals was a lot larger. But smaller positions now, just because we still don't have a lot of the confirmation that I would like to see. This is very early days, and the earlier you are, higher chances you have of being wrong. So it's something to consider when you are trading. So I was interested in Doge because I noticed if I was on the daily zoomed in, a lot of this structure here, a lot of tokens had lower highs and lower lows, right? But Doge was one of the very few that was printing higher highs. That was something that I like to see. Virtuals actually, I don't believe even showed that. So it's not like it's not something that, oh, oops, excuse me. I thought I had that chart there. Um, yeah, so it's not foolproof. Oh, actually, no, actually, excuse me, sorry. Virtuals did have subtly a higher low. So this is something that you can look at with the rest of the market. If others are putting in lower lows and something else is putting in a higher high, it's definitely something you want to be interested in. This just happened to be a trade that worked out very well in my favor at that time. Doge looks very similar setup where we're starting to see higher highs and higher lows. So again, I entered on a swing break here. We are now technically in a daily uptrend. I like it too because the volatility is relatively low. The last time I tried to enter Doge was at slightly elevated volatility. I'm just going to mark it up here because I do like to showcase that. Slightly elevated volatility here, but I entered basically on a retest of this trend, but I was somewhere around in here. So, volatility, again, much lower than the highs. And that's that's really what you want to look at. So, yeah, that's basically it for Doge. Just looking like it had higher lows. I like that. We're in a daily uptrend. We're also starting to close in the strong half of this tool. It's showing strength. These are the things that we want to see. And again, just in general, in Doge's history, if you just draw a trend line on the weekly there, and once it breaks, it usually rallies. We broke, it rallied. Even in the bear market, draw that trend, it broke, it rallied. It was a bear market. So, of course, it was a dead cat bounce, but that doesn't mean that there wasn't a tradable range there to take some profits. So that was basically the original thesis for this trade. This liquidation event got you stopped out, but Doge is starting to climb its way a little bit higher into an area of strength. So I think that Doge has every chance of doing well, and the risk reward right here is pretty good. Okay. And then the last one that I want to show you is a pure gamble. This is not even a good trade. I mean, I'm just going to be totally honest with you. That's what I want to do on this channel. I just want to be real with you. This is a lending protocol on SUI, and it has the second highest TVL. So that's what got me interested in it. What I'm seeing right here basically is an accumulation. And the thing that interested me is on that major crash, we actually printed a higher low. Almost nothing in the market printed a higher low. And that just drew my eye. And I was like, okay, well, we got a nice higher low. And so I basically just bought on a retest of this trend. That's never a guarantee. And in fact, I haven't even looked at the volatility on this one, but why don't we just do that just because it was not something that I really even considered in this trade. But you can see that the volatility has basically just been coming down for quite some time. And what I would really look for would be when the volatility starts to increase here. Let me scroll that over. When you see an uptick in volatility, you want to see what the price is doing. So basically, we have an uptick in volatility here as the price is going up, gives you an early lead that there is a potential for further upside. Okay. But really the reason I got into this trade at all, we're at a small loss, is because the risk reward was really, really good. So we have 30% to the downside. So I can basically use 3x leverage on isolated. And then if it goes against me, I get wiped out. But it's a really small position. I think I basically put like $300 in here. That gives me $1,000. And then if we were to, ride this bad puppy up to the all-time highs, which is quite possible, turning that $1,000 into $5,000 with very, very little risk. That's basically the idea behind that trade. So anyway, I know we went through a lot this week. I hope that was helpful. Things seem to be getting stronger, which we've talked about a lot on the channel. We haven't really been scared yet until the market gives us even more evidence. I know I'm rambling. One thing that I do like to check every single time is the exchange volume. So why don't we just do that very quick? Because that is probably like the key component. Now, this particular one is a lagging indicator, but that has been also concerning. The two most concerning things to me that I'm tracking are the exchange volume and the USDT dominance. So the thing that I'm not necessarily liking about this is that we've just have been going straight down on the exchange volume. Now, we are just now starting to see the markets get a little bit of life and some on the daily. If you go to the exchange volume on the daily volume has ticked up. So because this is a 7-day average, it will take a little while for this to catch up, but we still have to watch this like a hawk. And basically, I also posted this on my X account. Really, what I want to see is consolidation about above 45 billion dollars. Basically, if we can get support on this $50 billion or $45 billion region and start consolidating sideways, nothing wrong with consolidating sideways. That often leads to higher expansions, as we can see. We just don't want to be dropping down too far beneath these levels or even back into these levels. It's just not really going to be promising for the crypto market. So now we're done. Hopefully that was helpful. Please, if you made it this far, leave a comment down below and just give me anything that you would like me to cover, any tokens that you want me to cover. Please let me know. Also, join my Telegram group. Just hop in the chat. We got some people in there posting some of their trade results. In fact, actually, I'll show you this. This is that virtuals that I called on the day, basically. Well, actually, I think posted a couple days later after this one. But anyway, posting that entry here, and then we have a couple other people posting their results as well. We have Fritz here with a 4,000%, or excuse me, a $4,000 win there. Absolutely wonderful. So yeah, just a good group of people in there with their different trade ideas and how they approach the market. So yeah, just come on in, join the community. You can hop in the general chat and ask any questions that you like. If you're new to crypto, if you've been here a while, just hop on in there, drop us a line, and we'd love to have you. So anyway, hopefully that was helpful. See you next time, guys. Later.